The middle class is disappearing. According to this Pew Research report, the middle class from 1971 to 2023 went from 61% of the population to 51% of the population. That is a 16% decline. During the same time period, the upper income class went from 11% of the population to 19% of the population. That is a 72% increase. So from 1971 to 2023, the upper income class has grown by 72%, while the middle class has shrunk, and the lower income class has also increased by 11%. If you watch my other video, you'll know that 1971 is an interesting year, and there's no coincidence that the Pew Research Center picked this as the starting point for this chart, because in 1971, the dollar was taken off the gold standard. So instead of being backed by gold, it was backed by nothing. The 1950s and 60s, that was the high point for single income families. Median home prices were about 2 times income. I think the exact number is like 2.6 or 2.7 times income, meaning however much money you earn for the year, you multiply that by 2.6, and that's how much the median home price was. You can see on your screen, the median income at that time was $5,600. The median home price was $11,900. How beautiful is that? And the average car price was around $2,000 to $3,000. So in that time period where the United States was at peak efficiency, capacity, they were the dominant leader in the world militarily and economically. You could, as a teacher, as a factory worker, you could earn a modest income, but still pay for a home, a car, and be the only earner in your family, and your family was well taken care of. Fast forward to the 1970s. The American dream was still achievable, say in the early and mid 1970s. Side note, the American dream was something created by bankers, because when you take out a mortgage, which is considered the American dream to buy a home, who always wins? The banks. Okay, back to it. But inflation was rising, interest rates were rising, and wages were starting to stagnate. As you can see, the median income was $9,000. The median home price was $23,000, so it almost doubled. But the median income didn't quite double. So as you can see that separation, the median income didn't quite double, but the median home price pretty much doubled. So the amount that you could buy for your dollars, the amount of home you could buy for your dollars was starting to slip. Cars remained about the same, still affordable, but let's see what happened in the 80s. Median income was about $21,000. The median home price had jumped pretty significantly, especially if you go back to the 50s and 60s, to $47,000. And you started to see the onset and the rise of dual income households. And that's because just to make ends meet, just to afford the home and the car and etc., you needed 2 earners. Now, also, what you started to see during those times is people wanted more. They wanted the fancy appliance or the nice shiny new car or fancy clothes, etc. So our lifestyle, after several decades of being a wealthy nation, our wants started to increase. We started wanting bigger and shinier things. If you've been in the market for a home and you've looked at older homes, you'll notice the closets were much, much smaller than the ones that we see today. Now it's like if your closet isn't a walk-in closet, then you don't want it. So one of the reasons the middle class was shrinking is that our desire to amass more things was increasing, but a lot of it was just the cost of everything going up. Fast forward to today, as of the recording of this video in 2025, home prices are rising much faster than wages. The median income is $81,000, but the median home price is $412,000. Now think about that. That's about 5 times income. But if you look back into the 50s and 60s, it only took 2. That is a substantial increase, And that is a significant barrier to folks who want to buy a home and achieve the quote unquote American dream. Real wages are stagnant. And as I mentioned before, the lifestyle boom is excessive. When we look on TV, everyone has the fancy car or the 5-bedroom house and the huge backyard, etc. So the disappearing of the middle class is effectively the combination of our desire for more coupled with the things that we want being more expensive, especially if you're in a metropolitan area, a big city. Now, these numbers are different if you want to live in rural areas. So if you want to live in parts of Appalachia or in the Midwest, parts of the South that are removed from some of the larger cities, you can still really live well and comfortably without making a ton of money. Housing is more affordable, etc. The only thing is there are fewer jobs. So in order to get a job, you typically have to be a little bit closer to the city. If you have to be a little bit closer to the city, then you have to pay higher prices. Of course, there are folks who work remotely or make their money online, and they're able to kind of escape that matrix. But generally, if you want to be able to afford the nice house or the car, you're going to want to or need to live closer to a metropolitan area. You may have seen this chart. It went viral online. It's the percentage of 30-year-olds who are both married and homeowners. And as you can see, since about 1990, this percentage has dropped off a cliff. And it's really unfortunate that younger people nowadays have given up on the quote unquote American dream. They've given up on the idea that they can own a home. In case you're wondering, okay, why has all this happened? Damon, I get it. It's more expensive to live. I see that when I go to the grocery store. I didn't need you to break that down. Okay, got it. Here are some of the reasons why this is happening. First and foremost, in 1971, the dollar was removed from the gold standard. Soon as that happened, inflation started to spike. So the prices of goods and services started to increase because there was no anchor. The dollar used to be anchored to gold. Gold was priced at $35 an ounce. So you knew that $1, what exactly it was worth. That kept people honest. It kept the government from spending too much, etc. And once it was taken off the gold standard, all bets were off. The government could spend as much as they wanted. They could print money out of thin air. More dollars in circulation equal inflation. Prices of goods and services go up. You also had the baby boom. So coming back home from war, the baby boomers had a bunch of kids. That increased the demand for homes. And we know that when the demand for something that is, especially something that is scarce or is fixed, you can't just build 100,000 homes overnight. It takes time for the market to respond to demand. So if all of a sudden you have a bunch of people who are now wanting to buy homes, the price of the existing homes are going to increase. The third reason is trade agreements. And you can see these on your screen. The General Agreement on Tariffs and Trade, the North American Free Trade Agreement, more commonly known as NAFTA, and China entered the World Trade Organization, or the WTO. So the GATT and NAFTA both basically lowered or eliminated tariffs, which made it much more cost effective for companies to move their production overseas. So we saw a lot of corporations, a lot of manufacturing companies and plants leave the United States because of these tariff policies and start to set up in other countries so they could produce goods more cheaply. And what did that do to the economy? It put a strain because a lot of the jobs that were in the factories were now gone. And many of those jobs were high paying with pensions and retirement, etc. Look at cities in the Midwest. Detroit is a perfect example. Detroit is a shell of its former self because a lot of the U.S. vehicle manufacturing went overseas to Mexico, etc. And once China was allowed to enter the World Trade Organization, they were then in effect allowed, in quotes, to sell their goods to countries all over the world. So if you're old enough, you remember when you would look at something, it might be made in Taiwan, or it might be made in Mexico, it might be made in China or wherever. And now just about everything that we have in the United States is made in China. It wasn't always that way. And because the Chinese, once they entered the WTO, they don't have the same type of worker protections in their country as, say, in the United States. And so they were able to work their employees for very low wages, which made their goods compared to other countries much cheaper. And so we, meaning the United States, started to source more of our goods from China. And then lastly, globalization, automation, taxation. And you can see whether it was supply chain optimization, making it cheaper to produce overseas and get it to our country. You couldn't always make something halfway across the world and it get here in a couple weeks, but with the improvement of our supply chain and our machinery, that became an option. With automation, it reduced the need for people and manufacturing jobs, which were once the backbone, the engine of this economy. Corporate tax incentives. Corporations were literally incentivized to move overseas, and it has to go to its shareholders and say, hey, we are profitable. So if there's a way for them to go overseas and be more profitable, they're going to do it. And then lastly, a strong dollar. When our dollar is strong because interest rates were increasing from 1971, it makes our goods more expensive to the rest of the world. And they started to buy other options. So if you've ever sat and thought, man, is it just me or is it just harder to live? Is it more difficult to just do the basic things that I need to do, like buy groceries and etc.? No, it's not you. There are a lot of forces at play that have made this reality the way that it is more difficult for every one of us to maintain our standard of living. So what can you do about it? What's the moral of the money? The moral of the money is buy inflation, not depreciation. And I encourage you to watch my last video where I talked about fake money. And we need to exchange our fiat dollars that are losing value every second of every day and exchange those for assets. Number two, we need to really look into how to reskill or upskill, looking into the future and seeing where the economy is going and thinking, what new skills can I obtain that will make me more valuable in the workplace so I can make more money, so I can live the type of lifestyle I want to live, and also invest more money so that I have a nest egg for the future. And finally, combine lobbying with your vote. If you remember the slide that I showed you, and I'll put it up here again, much of the reason why we're in this situation is policy change. So yes, voting is an important measure, but voting coupled with voting with your dollars is even more important, in my opinion. That's why corporations spend millions and billions of dollars on lobbying operations, because they help certain politicians to get in office. And when that politician gets in office, they literally owe whoever that lobbying organization is, they owe them a solid. And when those politicians get in Congress or the presidency, they enact laws and policies that benefit their constituents, the people that got them there. Hopefully these morals help. And if you like this type of content, make sure you like, share, and subscribe. It helps me a ton, especially when you share, so we can grow a community of like-minded folks who want to gain in wealth and knowledge, not only just to ingratiate ourselves, but to help other people. Until next time, take care.